let's go ahead and get started, shall we? As I mentioned with the agenda, I've got to tell you about who we are at SBDC. We're going to go into some of the QBO options in the setup, some of the advantages of working with the ledger and the accounts, always conclude with the reports, and finish with the review. Now, we only have an hour to work with today, so therefore, you'll have to understand some of this information is going to be condensed, but you'll notice that I'm going to take an unorthodox approach with it. Why? Because you'll see in a sec, but before that, let's actually talk about who we are at SBDC. So we stand for the South Carolina Small Business Development Center. No, we are not part of the SBA, but we are actually managed and funded through all levels of government, whether that's federal, state, and local. Because of this, we're able to offer no cost and confidential counseling, so one-on-one. As long as you're for-profit, you're going to conduct business in some capacity in South Carolina, we can help. We can't give tax advice, we can't give legal advice, but we'll find a way to connect you with those resource partners. And that's part of what you see here on the second bullet point, with the access to the valuable resources. Now, that's not just connecting you in with CPAs and attorneys and insurance brokers. No, that goes beyond that, and that includes market research. And also, too, as we'll see here, with QuickBooks. As you will notice on the third point, we do routine workshops. I would strongly encourage you to stay on our email list so you can remain up to date on all of the offerings that we will have, thus going forward. And last but not least, we work on some specialty programs, including exporting, manufacturing, product development, and in this case, cybersecurity. And that's something that I assist with as well. Now, not the topic at hand, but we still wanted to make sure that you're fully educated on what we do here at SBDC. Now, with that at hand, let's actually talk about QuickBooks. I told you, we're going to do a bit of an unorthodox approach. I will tell you the famous phrase, QuickBooks will either work for you or against you. And yes, QuickBooks Desktop has been essentially retired. Everyone is migrated to QBO, QuickBooks Online. The good news about that is the ubiquity. You can access it from anywhere. The drawback is it has some limitations. But I see QuickBooks as often the most common request that comes my way in terms of technical assistance. So what I decided to do was reverse engineer a lot of it into an Excel format just to kind of show you what the program's actually doing. Because if you get into a lot of trainings, and those trainings that are often provided by Intuit, you'll notice they'll say, click this or click that. They're not actually telling you why you're clicking that necessarily. They're not showing you what's going on behind the scene. That's what I'm going to try to educate you a little bit on the best practices on the program. Speaking of the program, you got four options, essentially. You got the simple, you got the essentials, you got plus and advanced. In all honesty, pretty much everyone on this call is probably either going to fall into plus or essentials. Simple start for what it's doing. You can honestly manage as much in Excel through that. The only advantage is it's going to have this ability to connect in and do some additional invoicing. Advanced, for its price, as you can see, they're going to give you a 3-month discount. Now, we can also have a special SBD discount through Intuit, but eventually you're going to get hit with the high price tag that you see on those. With the advanced going up all the way to the full price at $235 per month. Essentially, advanced gives you more analytics. It gives you access to a thing called Spreadsheet Sync. But in all honesty, I think most clients are probably going to fall on the Plus Essential. Here's the thing I encourage about Plus. They call it the most popular, mainly because it has inventory capability. You can add up to 5 users for that. But I think this is the underrated component. For any of you who are on the call that are interested in government contracting, I strongly encourage you to have Plus. The reason being is you can activate classes. You cannot do classes on Essential. Therefore, if you want to manage and see, okay, well, what's my overhead pool doing? What's my G&A pool doing? Or what's my fringe pool doing? Because those are pools that you actually have to figure out your wrap rates when you're government contracting. For those, you need Plus, because classes are a great way to manage it. Otherwise, you're going to be trying to do informal things with tags, and thus it's not going to be as effective. But also, too, Plus has got the capability of inventory. So just letting you know in terms of what are those offerings. Now, once again, you have to find what's best for you. But I did want to kind of throw it out there. And yes, you have other options in the case of QuickBooks and payroll. Payroll acts as an extension. We're not getting into that today. Like I said, this is the 101, the first part. We're going to try to do several subsequent webinars to include, because there's so much we could go through. But just for the starting point, I really want you to think about what's available. Now, here's the thing. You'll notice every one of those says expert assisted. I actually encourage you, if you already have set up your QuickBooks, great. we can set up a one-on-one consultation and go through that. I do that routinely. If you have not, please actually wait until I'm on the call. I find it'll be actually easier when you're going through some of the steps and having to work with Intuit. Now, here's the thing. You're going to get a copy of this webinar. I actually encourage you to use this test drive, even if you already have an active QuickBooks. Why? Because you can test anything that you would like through this. You can break the program, and you know what you have to do? Hit the reload button. When you hit the reload button, it starts over from scratch. And yes, this is part of the direct training if you decide to become a QuickBooks Pro advisor. But I do encourage it even if you have an active QuickBooks subscription, simply because you can test anything and everything that you would like within the system. Even if you're working on Simple Start, this test drive is going to give you access to all the features. Granted, you can't save anything, it's a sample company, but once again, you can use it for its test components. All right, so when you get into QuickBooks for this case, we really need to approach this with an all-in mentality. Because unfortunately, if we only do it partially, we're going to end up with, unfortunately, the grade that's going to be partial. It's what I used to say when I was a professor. Now, this all stems around the chart of accounts. I told you QuickBooks can work for you or against you, right? And you're thinking, okay, if I do all the right things, I never have to have it fight against me. No, it's still going to fight against you. One of the ways it's going to fight against you is against the chart of accounts. It would be nice to have full control over the chart of accounts, but you do not within your QuickBooks subscription. Now, it's going to ask you in terms of the interview process when you first order your subscription, what is your industry? Essentially, it's trying to compile a generic chart of accounts template that will be applicable to your business. The unfortunate thing out of that is they give you quite a bit of superfluous accounts and sub-accounts for that variety. Now, a lot of these we can delete. In this case, we make them inactive. But you want to have the chart of accounts set up right, and I can show you some examples, like even in an Excel file, to see how that might look. But that is critical, getting the chart of accounts correct. One of those things you're going to see on a subsequent slide is actually the numbering system for that in accordance with GAAP, all right? But that is key. Everything revolves around these chart of accounts. Because everybody thinks, oh, I have QuickBooks, I don't need to worry about accounting. No, you actually need to be learning as much about accounting as you can, because everything that's in an accounting textbook is going to be somehow integrated into this program. It just tries to streamline it a bit, but the more you understand about it, the better. Second is the connection. And a lot of times within the essentially easy step interview, they don't really call it that these days, but when you sign up and start your QuickBooks platform, that's what's in essence doing. It's going to ask which apps you want to work with, okay? Because you have the two forms. You got the connections and the apps. So the connections are going to include your bank accounts. Could be a checking account, could be a savings account, could be your business credit card. Typically, those are the three that I see. If you have a business checking, a savings, and a credit card, they're each going to show up as an individual account in that case. Now, you are not required to connect any of these to your chart of accounts directly. You could import it manually, but a lot of times this will help with the ease of the process and allow for a little bit more of a streamlined process when it comes to categorizing each transaction that flows through said account. And like I said, last but not least on here is the apps component. Well, the apps could include PayPal. You know, it could be Square, it could be Clover. The list goes on. You can see which of these third-party applications that can be integrated into QuickBooks. I told you earlier on with the Plus, it has the option for an inventory system. That inventory system is rather rudimentary. So you may prefer something that's a bit more elaborate that allows you to have more control for your business needs. If so, you need to see how it's going to connect in. And that's how you'll do it with the apps. Now, you have the capability of doing both of these within the easy step process, or you can do them manually later. It is honestly irrelevant at that point, but I do want to make sure that you have all three of these components working in tandem from the beginning, because if they're not, once again, QuickBooks is going to struggle for what we need it to do. Now, as I mentioned, right, the GAAP account numbering system, this is going to be instrumental if you actually want to have a proper chart of accounts, okay? This is a great resource if you would like, okay? And if you want to see, I can actually pull out of this really quickly, and I can open up what that will actually look like. And when you come through here on the GAAP system, you'll see it has just a sample. It breaks down starting with our assets, works all the way into liabilities, equities, etc. Now, by default, QuickBooks is not going to allow you to do this on your own. You have to go into account and settings and actually set the chart account numbering system to be active. By default, it is inactive. But this is just a good way of actually seeing how you can work through. Like with the assets, it starts with the liquidity and works its way into the least liquid asset. And then it follows with liabilities, equity, etc. Okay. But for your resource, this is what we have as well. And I wanted to share it with everyone just as an additional resource for you. Okay. Now, I mentioned there are some other things that you can consider with the QuickBooks aspect, right? I mentioned classes earlier. A lot of times businesses like classes perhaps for the product. Okay. I see people argue between whether they should use classes, tags, or location. Now, typically locations, the name is almost self-explanatory on that. Say perhaps if you had, an Aiken location, if you had North Augusta, perhaps Columbia, etc., that could work. A lot of times I actually use classes and tags together for two purposes. I mentioned the case, like if a business wanted to look at how are they actually doing a proper pricing. Well, you can do that if you go through on your transaction. You can set where you can apply a different class on each and every aspect of a transaction. And you can split transactions. You can give multiple classes within a singular transaction. A lot of times we use this for pools. I'll actually look and say, okay, is this part of the transaction general and administrative expense? Is it an overhead expense? Is it a fringe? What I end up using the tags for is much more informal. Tags are allowing you to actually pull a report based on them as well. But tags you can only do on that case based on the overall transaction. You're not able to split that down how you normally would do perhaps with an expense. So in this case, I use pools for classes. And a lot of times for the tags, I'm usually saying whether it's direct or indirect. Either it's client-based or it's non-client-based. Because if I have those two, a lot of times when a business is really wanting to get the most precise pricing model, this will allow us to actually calculate appropriate wrap rates and see what they should be charging. So they're just other tools that you can utilize. However, you are going to have to activate them if, for example, you have Plus or Advanced. In this case, like I mentioned, if you're working with Simple Start, classes are not going to be available. So just understand part of your subscription may or may not limit what follows under here as well. Now, I wanted to stress this because I said this is behind the curtain as to what the program's actually doing. QuickBooks operates on double entry accounting, whether you like it or not. And I know some of you may roll your eyes back to your accounting classes. I did when I was a student back in the day. I said, gosh, I don't want to have anything to do with double entry accounting. Well, QuickBooks is doing that behind the scenes, whether you like it or not. And you can actually test with different transactions to see how that's going. So if you want to actually take away one slide, take a screenshot of this, it will work well for you. It's actually showing you typically how you increase an account. Now, I did have to put an asterisk to that because sometimes you do have contra accounts. And when we get into my Excel example, showing you how QuickBooks would operate, that will actually see examples of contra accounts. But typically, if we want to increase an asset, we debit it. Okay, whether that's your cash, whether that's a specific bank account, etc. Okay, with the liabilities, typically, if you're going to increase the liability, it has a credit. Same thing with equity. Now, there are a few examples within equity where debit actually incurs, but typically the process is if we want to increase equity, we have a credit for that case. Same thing with revenue. And last but not least, expenses are often debited to increase. Okay? So I wanted to stress, if you really want to see what's going on behind the scenes with QuickBooks, this is still how it's operating with the simple fact of a double entry accounting system. Perfect example is when you have an opening balance. Like if you were to go into and say, all right, we have an existing bank account, but you didn't want to link it for that case. Well, in that scenario, you would need to create essentially an opening journal entry. And what's going to happen in there? Well, it's probably going to see the account being debited for that case and equity being credited. And just remember, if you're doing any forms of double entry accounting, the journal entry within QuickBooks, everything's got to balance out. Because if it gets out of balance, unfortunately, that's going to be a problem for you because at the end of the day, the accounting equation is saying assets equals liabilities plus equity. It is an identity equation. It has to be true. Now, with cash. A lot of times you look in a business checking or a business textbook, it'll say, there's an account called cash. For you, your business, it's probably not actually going to have cash as an account. You're actually going to have cash on hand. That's how QuickBooks classifies most quote unquote cash accounts. What are they? Probably your checking account, could be your savings account, or it could be a contra clearing account that we may create called petty cash. Those are linked in with bank accounts. Now, when you go into the bank transactions, because that's how you'll be able to see what's going on with your business for that variety, you want to make sure that everything is properly reconciling. A lot of times I see issues, particularly when we set up the connection into the bank. Why? Some cases occur because of pre-authorization. If it's a pending charge, it may not actually show up on the balance. I've had that routinely with several major institutions. And occasionally, I have to do what's known as an adjusting journal entry to fix the problem, okay? So you really want to make sure, just because you think, oh, it's connecting in, it's going to be great. Well, you may not always have the case. Typically, the bank, when you establish the connection, it'll say, how far should we draw back from? And usually that's going to be probably January 1st right now in 2024. It can draw back further. You actually can export out essentially your ledger of transactions from your online banking as a CSV file, a comma separated value, and manually import that if you wanted to bring back in, the entirety of all the transactions. But do not be shocked occasionally if you have a pre-authorization issue that occurs with reconciliation. Sometimes I've noticed that, and I've just had to do one or two adjusting journal entries to get it to balance for that case. So understand that. And here's the thing, if for some reason your QuickBooks is entirely screwed up and you feel like it's just worth more trouble than it is, don't be afraid to actually essentially have what's known as creative destruction in the world of business. Blow it up and start over from scratch. You can create opening balance journal entries to get everything back to where it needs for perhaps whatever your current tax year is, and then go from there. Occasionally that's happened. And don't worry if you accidentally misclassify an expense or transaction. It's rather easy to go through simply by clicking that and actually putting it into the correct category, okay? Now, there are a few accounts which you cannot get rid of, the undeletable or the indelible, depending on your vernacular, right? Anything that's got undeposited, you cannot get rid of. Anything that's got uncategorized, you cannot get rid of. And yes, there is one particular equity account called opening balance equity you cannot get rid of as well. Usually that's what I have to do. I have to fight against QuickBooks because most of the times it's going to require an industry, so it's going to give me a sample chart of accounts. I have to go through those and make inactive all the accounts I don't think we need. Now, here's the thing. If you find that QuickBooks has already created a major account with several sub-accounts, what you actually have to do is don't try to delete the parent account first. You need to go through and batch action, delete or inactivate those sub-accounts first. Because if you don't, QuickBooks is going to freak out and say, hey, it has sub-accounts, therefore we cannot delete it. Now, you can always pull back anything that technically is deleted. Not really. It's simply made inactive. And a few of the accounts that you can't get rid of, you can actually turn into a different account for that. Now, I do encourage you to consider this from two perspectives. One, you're working with me. I'll try to get a good chart of accounts for you. But please, work in tandem with your CPA. I do not want to make said professional mad. Some CPAs are rather particular about what they want with your chart of accounts. So please operate under their advisement because once again, I'd like you to have a good relationship with them and I'd rather them not be mad at me or our office simply because we're trying to set up QuickBooks for a variety of ways. A lot of times I'm going to try to streamline it as much as possible for you. Now, if you are a government contractor or potentially pursuing government contracting, we essentially want to make your books DCA compliant. And in that case, we can actually use a fun tool through the chart of accounts templates that I, as a QuickBooks Pro Advisor, have the capability of doing. Essentially, I can set up a certain template and drop that on to your account, which alleviates some of the issues, but there's still some legwork that's got to be done. Now, another thing I encourage of you to actually create is a contra asset account called petty cash. In essence, this is a clearing account. Why? Now, I'm not saying, hey, take out some cash on this and just spend it. A lot of times it's good to have a complete paper trail. Now, that's usually what I don't use petty cash for. I use petty cash for one reason, track out of pocket expenses. because at the bare minimum, you're going to have one out-of-pocket expense, and that is the articles of organization or articles of incorporation. You had to pay that. Why? Because you don't have a business checking account yet. Probably, too, what may occur is that you had to pay for a location. If your business is using a virtual office address, you have to secure said address before you even file the articles of organization or incorporation. You still want to track those, right? Because they're legitimate business expenses. You just didn't have a business checking account there. Petty cash is a great way of actually doing that. I can show you two ways to potentially do that. One, to create a manual journal entry that does not involve petty cash. The reason I like using petty cash is because QuickBooks will actually recognize everything that we put through it as a legitimate expense. If we simply do just a normal equity route, QuickBooks will register it, but it won't treat it as an expense. It'll just treat it as a journal entry adjustment. So I do encourage your company to actually include one as well. Now, in the world of equity, I don't know how many liabilities you're going to have. You got a credit card, it's going to show up. In this case, you got current liability. Why? Because you got to pay off those balances. Perhaps you have a short-term debt that also occurs. You may have no liability, but you will always have equity. Why? Because the accounting equation is assets equals liability plus equity. At the bare minimum, you need these 3 equity accounts. I told you we couldn't get rid of one, the opening balance equity. What I do, I convert it into another account called capital. Now, if you are a corporation, you could treat the other account, which is known as draw, differently for that purpose. So it just depends. In case of a corporation, you may actually call the capital common stock or preferred stock. You may have multiple versions of it. But I strongly suspect that a lot of businesses on this call are probably going to be single member LLCs or multiple member LLCs. And in that case, you can simply convert the opening balance equity into capital. Okay. Now, if you have 2 members, you actually want to track each member own capital. In that case, you have 2 capital accounts, one for partner A, one for partner B. The other element that you want to create is the draw account. In that case, let's say you're a pass-through LLC. That's how you pay yourself, right? That's not an expense. It's simply you pulling money out. Thus, it's an equity account. But in this case, it's going to be a contra account. When I say contra account, it means that's going to have a negative balance. Okay, the petty cash will start negative. It'll clear out. You always want to probably have a 0 balance if you're using it for that purpose. The draw is probably always going to be negative because it shows you pulled this much money out. Now, if you have, in this case, perhaps 2 or more partners out of that, you can show multiple draws, one for each individual. Okay, but if you're a single member LLC, you only need those 3 accounts in equity. You need a capital, you need a draw, and the other one you can't really deal with, and that's called retained earnings. The retained earnings essentially functioning through the net income, hence the NI here. Okay, so like I said, if you're just one person running your QuickBooks, you only need these 3 equity accounts. You're already going to have retained earnings in relation to the net income. Can't get rid of that. Just convert the opening balance into a thing called capital and create one if it's not already established as an owner's draw. And that'll be your negative variety. Okay. Otherwise, you really don't need to worry about anything else from an equity perspective. And I will tell you a lot of Intuit's sample chart of accounts that they'll try to implement on you will include much more than these 3. Now, if you want to go further in depth, get to the granular level for your business, by all means, that is certainly your option. However, if you want to keep this simple and sweet, this is the way to do it. Now, speaking of that owner's draw account, as I mentioned, contra, this is your salary. Now, here's the one thing I see oftentimes that occurs, and that's personal expenses. If you even go to Intuit's website, they'll even have a section about here's how to treat a personal expense coming out of your business account. As a business consultant, in my professional opinion, I prefer that no personal expenses actually come out of the company account. I like to keep business and personal separate for a variety of reasons. Most of them are pretty good. So what do I encourage instead? If it does occur as a personal expense, you can still treat it as a draw. However, what's probably more advised is have a set schedule in which you will have your own draws. You said, hey, yeah, you know what? I want to go on vacation, right? Don't go write that vacation out of the company account. Okay. Instead, through your owner's draw account that you have, pay yourself X number of dollars that you would like if you can show that this is indeed all your money. And then on your personal expenses, you can actually go pay for that vacation. Keeping the separation much more distinct, and it's going to benefit you. But the nice thing is, once again, we're establishing this as equity because it's not an expense. If we treat it as an expense on this, it's going to reduce the net income. Now, I understand that another legal structure, like a corporation, is not going to have this capability. Even if you were an LLC and you're taxed as a corporation for that variety, and you want to treat it differently, if you wanted to be an honest-to-God W-2 employee for that through your company, you can set up the taxation structure to do that. You can also treat it as compensation to officers, all right? For whatever the different tax structures, it's still following the fundamentals, all right? Otherwise, we want to keep this as the contra equity account known as owner's draw. Like I said, if you got two people, set up two accounts, one for you, one for your business partner. Now, there is another contra account that's going to show up most likely on your books. That is accumulated depreciation. Like you buy a capital purchase, something that is expected to depreciate according to the IRS schedule. You can see what the salvage life is. And thus, if you pay, say, for like $1,000 for something, capital purchase, let's say it depreciates over 5 years, most likely through straight line, it's going to be like $200. The accumulated depreciation is actually going to keep that negative cumulative result of how much depreciation is occurring on those assets. Now, whether or not your CPA wants you to have this in place is a conversation that you need to have with them. You may not have any capital purchases. You may rent everything entirely. Great. And in that case, your net fixed assets probably are not going to exist in this. However, most of the times you will have the depreciation. You'll actually have the asset, you'll have accumulated depreciation account, and you'll also have a depreciation expense account. So they'll all be separate. But I did want to let you know this one most likely is going to show up within there. Now, what about the world of banking with QuickBooks? Like I said, you can connect in all your bank accounts. Assuming everything reconciles properly, it's going to be to your benefit. One of the best things I actually enjoy through here is the ability to capture the receipts. Everybody's always like, oh, everything's digital. I don't need to hold on to receipts. No, please keep those receipts. The best way to do it, just as immediately as the transaction comes in, you can upload the copy of it. Take a picture with your phone, boom. It's uploaded. It's linked into that transaction. Every transaction has the capability to add an attachment to it. Now, like I mentioned earlier, you can actually split the transactions because a lot of times, let's say, a perfect example, you get paid for clients via Venmo. Venmo sends it in just as an aggregate lump sum. Well, you actually want to break that up into which of your clients are responsible for what portion of said transaction, split it. Same thing with an expense. You can do all of these individually on the level, and you can also add a class, assuming you turn classes on to a transactional level on each of these splits. Now, QuickBooks is using AI in the background to some degree. And part of that actually is thinking about it from the rules. And you can set up rules within banking. A lot of times it's going to try to be smart on its own and say, hey, well, we realized this was an advertising expense in the past. I assume you still want it to be advertising. The QuickBooks is going to do some of this automatically. It's going to give a suggestion. It's not a true rule. You actually have to go in and create the rule for it. Like, say, hey, if you ever see it come out from this account, it's for this category. Now, sometimes that may not work. So you got to understand, think about it as to how you set up those rules. You need them to be precise. If they're not, you could theoretically misclassify something. But once again, rest assured, if it does happen, we can go through and actually fix those misclassifications. So just understand with the banking components, you can find it through the banking transactions. All of these accounts, number one thing is we want to make sure everything's reconciled. Please upload those receipt captures in there. It's going to make your life so much easier for that. And not to mention, you can take advantage of the rules if you so choose. Now, people think, oh, I've just set up a few rules. I don't need to go check my banking. No. With QuickBooks, it's there to alleviate some of your time constraint, but you still have to manage QuickBooks on your own. Make sure everything's good, because I'll understand when it comes to accounting, the tsunami effect is real. You take care of the problem in its early or infant stage, you're not going to have any issues. But if there's a reconciliation error that occurs in January, by the time we get to December, there's probably more than one, and the effect is compounded. And then we are fighting against a rather large proverbial tsunami when it comes to your accounting record. Now, there are other options within QuickBooks. One of the things I love that's great for you as a small business owner are the reports. The number one thing that you can always see is anytime you want to understand what's going on a transactional level, just go into the reports, up in the search, where you can find it on the accounting portion of it, type in the ledger for it. And you can actually see in detail what's going on. Or more importantly, you really want to get in depth and see the double entry accounting. Instead of typing in the ledger, type in journal. That will actually show you everything on a double entry accounting system perspective. Every transaction, all the debits, all the credit. Now, maybe you want a bit more of a top level action, and that would go to your P&L. P&L on the balance sheet. P&L is the income statement, profit and loss. You want to see what's going on in real time with the company, with the profitability, excellent. One of the things I actually encourage you to do is with the P&L is do everything as a percentage of income. You can actually do that report. So that way we actually can benchmark your business against industry average. Same thing with the balance sheet. We can do it as a percentage, but instead of percentage of total sales, we can do it as a percentage of total assets. But I like to check the balance sheet because in essence, it functions as a trial balance of a sort. I can make sure that everything is actually adding up properly. I'll be able to know if there's any issues going on. A lot of times, if there ever was an issue, QuickBooks with a chart of accounts will actually go in and essentially create an emergency balance for that, try to fix the problem and keep the identity equation actually accurate. But you may understand that doesn't always have the best success. Some other things we could pull out of there, the aging accounts receivable, the aging accounts payable. We can understand exactly who owes us money, who do we owe money on that case. And if we wanted to, we could go to customer segmentation. Now, I will tell you, you have the ability to actually pull reports based on classes or tags. As I mentioned with the government contracting, this is a great tool to utilize. If I wanted to track the three pools of fringe, overhead, and G&A, I could do that. Now, you could also use classes in tandem to actually understand what's going on with your product varieties. You can do that as well. So you can customize the reports to whatever you need. I do encourage a lot of times, can you export in Excel? It's going to make it easier, particularly if you want to export anything from me, please export it in Excel. In PDF format, it's just going to be problematic. Now, the nice thing about particularly, let's say if you're using Plus or Advanced, you can actually add in 2 accountants. I encourage the first one to be your CPA. The second one, if you're working with us, put me as the second one. That way we can actually go through and work on these reports and accounts in real time. Now, we are not done yet, far from it. I wanted to promise you and even to show you what's going on behind the scenes of this, so let's get into it, shall we? So I told you, I decided to reverse engineer a lot of what's going on in the program, and I put it into an Excel file for your purposes, just to show you what this would be an example of. This is one, I just came up with a fake company, Kirkland Express and a lot of zeros LLC. I decided to use the GAAP accounting numbering system. Now, as I mentioned, this cash account probably actually won't function as just called cash. It'll probably be your business checking account, and it'll show up probably something like this, 1011 or however you would like for that variety, okay? You have the option to actually set each of your accounts to the type. And yes, I went through and for your convenience and listed every one of the types that is in QuickBooks for this variety, from accounts receivable to the bank. If you're looking for anything of a cash basis, we want that to actually be under the bank for that capacity. Now, I did set up one for accounts receivable, and it gives you a chance in QuickBooks to do an account detail. So a lot of times you'll see that these options, and yes, I went through and added every one of them so I could actually test and see what was going on. But usually the ones that you'll see are the equivalent of cash on hand, checking, money market, perhaps savings. So on here, we've created one just for cash, but you'll notice I have that contra account I had called for petty cash. In this example, it's got a 0 balance for that because that's the goal ultimately, is that is just a clearing account for this case. We've also set up a few for inventory under the other current assets. Remember, current assets is anything expected to be used up in less than 1 year. All right. So in essence, yes, the cash and the petty cash would function under that, but the QuickBooks classifies them as other current assets. Remember, these categorizations are not mine. I'm simply showing the ones that show up with under QuickBooks. Now, perhaps you did have fixed assets for that variety. So in this case, I've got one for land, I've got one for a building, office equipment, truck, and you'll notice I have a contra asset account. I have one based on accumulated depreciation. And in that case, it is a negative number for that variety. Okay. So this essentially functions as all our assets for that. So if you notice, the assets in these cases were all under 1. Now, when you come into the numbering system for your QuickBooks, you're probably going to have your liabilities. In that case, probably what's going to show up under here is your credit card, if you have a business credit card for that variety. Now, in that case, it's not actually probably going to be listed as the accounts payable for that. You can actually, under QuickBooks, will list it as the credit card. Okay. But I'm just showing as an example of what could occur. You might have quite a few payables. In this case, I set up several to show, for an example, of a W-2 employee, from having the federal income tax withheld, the state to the FICA, broken up the FICA percentages of 6.2 to 1.45. I look to see perhaps a businessman medical insurance payable, and yes, they'll probably have to pay food and SUTA for that variety. This also includes things from sales tax. I had one for unearned revenue, which occasionally occurs. You may have an income tax payable, and then we work our way into the larger element, the long-term liability. Those are things that are lasting more than 1 year for that case. Now, like I said, if there's so much we could go in depth, but I just wanted to show you top-level action. Same thing for here with the equity accounts. I just showed us an example of what QuickBooks, I told you. They're going to classify that opening balance. There's no way around it. So you might as well use it to your advantage and just call it capital. You have your draw account, can't get rid of retained earnings, so it sticks around. And then you'll end up with your revenue and expense account. Now, if you notice, the dollar signs disappear here. I did that on purpose because I wanted to replicate and show what QuickBooks was going to have for you in that purpose. And in that case, you're only going to have the account balances on assets, liabilities, and equity. But the revenues and the expenses, you won't have an account balance show up onto there. What you can do is click to view the register to see everything that shows up under those accounts. But I told you, you could go into reports, you could type journal in, and you're essentially going to see this. To some degree, you are going to notice the different accounts. And yes, I realize Metric Courier is not an example. That's a test company you'll find on a lot of accounting systems and textbooks out there. But what you will see are things like this, though. In the case, the journal numbers, because this is literally how QuickBooks has chosen it slightly differently. A lot of times, it's odd. They'll actually stick the credits first versus the debits. Most accounting textbooks or other systems, you'll see the debits first and then the credits. But everything's balancing out on the journal entry itself. And in this case, you may notice what's going on with several things, the cash and the capital. A lot of times, if you had an asset on hand, you have to create an opening balance for that. Now, QuickBooks is going to help you do that automatically, but if you go into the journal, you're actually going to see something to this variety. Well, in this case, for buying office equipment with cash, and then you start working your way into more complicated things. Like an example of depreciation expense. I told you most expenses, they occur as a debit, and the accumulated depreciation occurs as the inverse of the equation. Now, what about when you decide to pay yourself? Hey, perfect example here. In this case, the owner's draw is occurring. Now, remember, I told you most of the times, if we wanted to increase equity, we credit it, right? But an owner's draw is a contra account in QuickBooks. It's going to have a negative balance. So in this case, when you decide to actually pay yourself and in the banking, you classify it as a draw, you go into the journal, essentially, this is what it's going to be. Instead of cash, it would actually be whatever account that you had listed it as, right? So it would probably say business checking. But in that case, it would debit the owner's draw. It would actually credit what's going on with that account. If you really wanted to get into more complex things, when you get into, say, perhaps managing W-2 employees, and a lot of times this is when you're doing QuickBooks payroll, you're probably going to start to see journal entries in the back end like this, from actually seeing what's going on with the expenses, what is actually payable as a liability, and then what happens, of course, when they're paid off. Now, I mentioned that you have out-of-pocket expenses that can occur, right? If you don't use a petty cash account, you can actually create a manual journal entry like this: 17 licenses. Let's say you had to go pay for, we could call this the equivalent of articles of organization. With South Carolina's would actually be $145.50 with an LLC, but let's just use it as a test example. You could list that under a debit for an expense, and you could simply credit capital. The reason being, you don't want it to impact potentially the business checking account because it didn't exist at the time. You still want to show essentially the equity contribution that you had and also have that as an expense. The reason I don't like doing that with QuickBooks is because it doesn't treat it as an actual expense. Instead, what we actually have to go through is we create the contra equity account. We go into the register, and then we actually say we want an expense to occur out. And that expense could be the licenses. In that case, the petty cash would show up as 150 as well. Now, just to show you an illustration, I could wipe out these. If we just left it at that one point on petty cash, this is what your QuickBooks is going to look like, a negative 150. Because the other part of the equation is going through later, you have to go through and actually say, okay, we want to clear out the petty cash. It's now an expense. In this case, we would debit it and just have that 150 in equity. So it took 17, broke it up into 2 steps. The reason, though, with QuickBooks is QuickBooks will treat it as an actual expense. The other route will still work, but the way QuickBooks interprets it, it will say it's not actually an expense, but it will be on your records. It'll still be accurate, but it's part of working the system to your advantage. And when you get into a balance sheet, it may look something like this. I just condensed down categories so you can understand. Most businesses never bother to look at their balance sheet. Please do make sure it's accurate. Like I said, I know you may or may not like accounting, but the more you know about it, the better your QuickBooks system is going to be. And individually within QuickBooks, it will show up the different accounts. I just aggregated some here just so you can see what they would look like. But if you do have capital purchases, you're going to have gross fixed assets, going to look for the accumulated depreciation, assuming that you're tracking that properly. You'll have your net fixed assets, which is simply these two together. You'll have any other current assets you have. It'll just combine the long-term and the current, and thus it'll go to the other side of the equation. Perhaps this is like a credit card. Perhaps you have other current liabilities that you owe. What you'll notice here is next 3 equity accounts will probably fall under net income, because once again, that net income is tied into retained earnings with the way QuickBooks treats it as. You'll have your negative draw account, and then you just want to make sure they match up for that variety. Your P&L will probably be a bit more condensed than this, but it could have these different categories. It really will actually, the nice thing about QuickBooks is it will only list a category if there's actually a balance on it. But in essence, this is what QuickBooks is really doing behind the scenes for that variety. Okay, so you want to make sure you're understanding as much as possible on that, because if you're not, that could become problematic. Now, I mean, this is what my QuickBooks looks like when I will manage it, potentially as your accounts. Okay, but as everything we've been talking about across the board, from the transactions to the banking, we're talking about the chart of accounts, and yes, you can deal with the receipts capture. You may not see advanced accounting here with the fixed assets, unless particularly you're dealing with perhaps plus or advanced. I don't know what you'll see depending on if you have QuickBooks Payroll incorporated. You will also have the ability to look through expense, going into your revenue. Right now, I'm in the case of reports in this scenario, right? If I wanted to look at standard reports, you will usually see them to be slightly different. It probably will start here with the balance sheet, profit and loss. Like I said, you can search for so many different things, from the journal all the way into the ledger, which shows up as general ledger. And yes, you wanted to look at it by class, you can actually have the list. You can have profit and loss by class, and the same thing with tags. But understand the tags are just groups. They're slightly different. Now, a fun always feature, if you're ever looking to go through, You have the ability to always hit the new button. And yes, if you ever wanted to, you could see what's going on and create a manual journal entry through here. Now, if you decide to work with us and we function as that quote unquote second accountant, I have a fun thing here with chart of accounts templates. And if you decide to actually attend one of our future workshops with contractors, we're planning to do in November, part of what we're going to go through is this DCAA template, and to kind of just show you what that start of it's not complete yet, but it gives us the ability to actually set all this up ahead of time and structure it for the best according to the business. In this case, we're trying to create a DCAA compliance. That way we can just drop it onto your books and we have it ready right there. So I know we went through a lot of information, and this is why I try to set up as many calls as I can one-on-one, because there's so much that QuickBooks can do. We've only scratched the surface, but I really wanted you to understand what it's doing behind the scenes for a lot of this, okay? Because the more that you understand about accounting, the better it is, because that's all QuickBooks is doing. It's just operating on a double entry accounting system. But if you go in blind without it, you're going to find that the program doesn't always work as you need it to, and you won't always fully understand what it's doing on a transactional level. But it is trying to streamline a lot of this, so you're not ever having to go through and create the double entry accounting system. Okay, it's trying to only show you essentially one side of it. But I wanted to kind of get behind the curtain on a lot of this, because so many trainings, they just talk about, point here, click this, click that. No, that's not what I'm really trying to do. I don't want you thinking about that way as a business owner. You want to be considering the implications of everything that you do into it, and see how it works together. It's kind of like we had a car and we decided to take the car apart piece by piece and put it back together. And that's in essence a lot of what I had to do is training with QuickBooks. Because in that case, oftentimes, you may have someone say, all right, just work with your CPA on that. But most you want to learn about something is try to reverse engineer it as much as possible. I mean, I really do enjoy working with QuickBooks. I'm happy with the program. There are some odd elements to it that do occur occasionally. You got to be prepared for that. But once again, if this is something that you want to work with, it has the capability to really help your business. Because at the end of the day, all this is trying to do with the top level action is help you make the best business decision possible. In essence, that is the top level mission of any analytical program. So, with that said, I will go ahead and stop or pause screen share here. I will see if we had any questions. I mean, like I said, we're here to help, do one-on-one consultations. I know some of you are my, already established clients. That's great. It's what we're working on, but, I'm able to help anybody across the network for that.
In QuickBooks Desktop, we were able to upload like the W-9 forms for vendors.
Yes.
Or things like that as an attachment. Are you able to do that on QuickBooks Online?
Yes, so the nice thing about QuickBooks Online with the W-9s, I'm glad you brought that point up, because so many people are like, oh gosh, I get a W-9, it's got somebody's social security, and I'm worried about it from a security standpoint. What you can actually do is go into that case with the contractors tab, and you can actually request through email and say, I'm asking an invite for you to submit your W-9. And it'll tell you whether they've submitted or not. And so Intuit's storing that information, but they're getting it directly through a secure connection with that contractor. And in that case, it gives the information that you need, and it'll tell you whether or not you've got it. So it does help on that, just from efficiency, but also too from a potential privacy standpoint, because that's PII, it's personal identifiable information. But no, that's a great feature that you can use with QuickBooks. You can set up where it's going through 1099s, especially too now they've got the email components, as well. But you want to be, of course, a little bit of security conscious on that. But it really does help with the W-9 with contractors, because I've got another client do that right now. I'm glad you brought it up. I really do appreciate everybody attending today. And like I said, this is my email address. You're going to get a copy of the PowerPoint. I'm going to send it to Carolyn so she can disseminate it to all of you. Also, too, we encourage you to please fill out the feedback from the surveys. That is critical information that we utilize to see what's being effective, what needs to be adjusted. Like I said, be happy to sit on any individual calls through Zoom. The nice thing is, you add me as a second accountant, we can just work on it in real time together, both in the program, and get everything that you need, you know, the specifications that you want, but also getting the information that is essential to make the best decision possible. Well, Carolyn, since I don't see other questions, I think this will conclude the webinar. I really do appreciate everybody attending, and I hope everybody has a great rest of their day.